Welcome to Adding Dollars. In this video, I'll be going over my weekly update on the highest volatility stocks, so stocks that are paying the highest premiums for covered calls and cash secured puts. Before I jump into this week's scan, if you're new to cash secured puts or covered calls, make sure to check out the videos in the description. Now let's go ahead and jump right into this. So I'm logged into the Thinkorswim platform. I'm going over to the scan tab and I'm going to be scanning in the S&P 500. I'm going to go ahead and click scan, and there you have a list of sorted by implied volatility, all of the stocks in the S&P 500. So let's go ahead and jump right in. The stock with the highest volatility right now is Warner Brothers with a 58% implied volatility. Keep in mind this is after hours data, so some of these numbers might look different once the market opens again. What I'm going to do is I'm going to go ahead and take WBD, which is the stock ticker, and we can go ahead and look at what kind of premiums you can get on these options. I'm going to look at 10 days out, and I'm going to look at this column on my far right, which is a custom column that I've created so that I can quickly see percentage profit for selling a cash secured put. If you're interested in this column, check out the link in the description. So if you sold the $11 strike price as a cash secured put, you would be able to make about 1.82% in 10 days. You would collect premium of about $19 to $20. And the risk here, as always, is if the stock goes below $11 and closes below 11 at expiration, most likely, then you will most likely be assigned shares, which in this case would be 11 times 100 shares because it's 100 shares per option contract. So you would need $1,100 in order to purchase those 100 shares if you got assigned. Now we can go ahead and look at the covered call side as well. You would need $1,133 to buy 100 shares right now, but then you could sell a call at the $11.50 strike price for about $27. This percentage premium column for covered calls doesn't do the right calculation. It does the right calculation for cash secured puts, but for covered calls, this is pretty close and can be used as an estimate of how much you would expect to make. So about 2.4% on selling this covered call just from the premium of selling. Let's go ahead and jump back into this list. Some of the other stocks we have Tesla, which seems to be on the list every week. We have Carnival, we have Paramount. We also have CarMax this week, and let's see what this is. We have earnings coming up on the 28th of this month. CarMax currently has a volatility of about 50%, and we can go ahead and look at some of the cash secured puts for it. So here, again, I'm looking at the 10 days out strike price, and if you wanted to collect 1% in 10 days, you could sell the $80 strike price and collect about $80 to $85 in premium in 10 days. The risk on this position is that, again, if the stock closes below 80 at expiration, you might get assigned on this position, which would cost you $8,000 to buy 100 shares. On the covered call side, you would need $8,156 to buy 100 shares, but then you could sell a call for about $130 to $135 and collect that in 10 days. Let's go ahead and jump back to the list, and feel free to pause the video and take a look at all of the stocks with the highest volatility in the S&P 500 currently. Some of the others that we have Nvidia, we have Etsy, we have Micron Technologies, we have AMD, which is usually in the list, we have Macy's, we have Enphase. We haven't looked at Enphase in a while, so let's go ahead and look at this one. It's a little bit more expensive. ENPH with 37% volatility. Again, 10 days out, you could make about 1% by selling the $117 strike price, and you'd collect about $108 to $110 in premium. But again, this would cost you $11,700 if you did get assigned on this position. If you didn't get assigned, you would just be able to collect the premium and the option would expire worthless. On the covered call side, if you had 100 shares, which would cost you $12,335 currently, you could then sell the $124 strike price and collect about $315 to $320 in premium. or about 2.6% just in premium. If you enjoyed this video, don't forget to like and subscribe. And in next week's video, I'm going to be looking at different stock lists like the NASDAQ as well as the Russell 2000 instead of just the S&P 500. So again, if you're interested in seeing those and staying up to date, don't forget to like and subscribe, and I'll see you all in the next